Hey, what's up, people? How are you doing? It's the Crypto Sniper. Yes, thank you for checking in, smashing the like and subscribing. We're going to talk to you about Bitcoin. Yes, we're going to talk to you about Ethereum. So we're positioning the community into Ethereum as well, and Bitcoin, and saying that this guy is going to do a 40K run. By the way, if you have a look at the YouTubes that we've done recently, there was a stream from last night warning that the 40K is coming soon. Whenever we start posting regularly, we're excited. We were close at the space. And you also saw it here, unveiling the 5 undeniable reasons that the biggest Bitcoin bull, and the one reason why you might miss it. This, of course, was also going on the Market Sniper, highlighting that gold is permissioning the anti-fiat category run. So we understand actually that a debt-based failure is actually going to be good for gold, silver, Bitcoin, and Ethereum. And there's a certain leader. The insiders move traditionally for the big value stuff first, which is gold. It is your God market. That is how it works in this world, friends. And Bitcoin is the God market of the cryptos, but gold is the God market of the entire anti-fiat category. And we got super excited because a major triggering event was happening on gold. We'll show you that. Let's put that on a bigger time frame. We've been highlighting that a trigger for gold will be very good. Now, what typically happens when you leave a 2K level? So a key triggering event was occurring, was our message, and that triggering event was going to be bullish for Bitcoin and Ethereum. Yes, this is a crypto channel, but a different market was going to be bullish for crypto and Bitcoin and Ethereum, and even the other alts in due course. But there's a firing order. There's a sequence to these things. Be in the liquidity. That's Bitcoin and Ethereum for the bigger moves. If you look at that, you've been in one of the best places. Let's just have a look at the 7-day numbers for Bitcoin. 11.7, 10.2. Then you fall to 2% for Binance, 5% and a half for XRP. Only Solana, which is on a rip, the insiders are up to something. There's going to be some level of announcement that's saying the VC chain is going to be used for something, without a doubt. That's why the insiders are buying. So there will be some news. I can't chase a pump. And Doggy, the meme thing that is, of course, elongated muskiness. Cardano is less than Ethereum, even though many people think it does a lot of what Ethereum does, only better, faster, cheaper, etc. So the token over the last 7 days has, in fact, been the big boys, the liquidity. You're getting double digits here. You're getting double digits, only beaten by Solana and the meme coin, which can leave you high and dry at any time. So that was the trade, and why we called Ethereum. Also on this channel, we showed you the ETH-BTC and the ETH dominance. So I think that actually this one's going to creep a little higher than Bitcoin in a bit. In fact, let's just give it a refresh. It's a slightly smaller market cap. Of course, it's still the biggest of the alts. 271, Bitcoin 816. So it's about a third of Bitcoin by market cap. So it's easier for it to go up more, and I expect those two to do. But the key thing was the key tokens as gold triggered for the anti-fiats. Now, what's actually happened that you have to watch? Always when you break a new level, you smash it with momentum. That was the original level. Gold left 2000, kind of like Ethereum, which has been hanging in and around up and above 2000. We'll look at that in a minute. But here you see it. Gold left 2000, it broke with momentum, nice little wind up, and now it's in a little bit of a shooting star. Now we'll see the US session. It may not stay as a shooting star, it may rally a bit, but if it stays for the week or this entire week in a similar structure, you could get a slight pullback towards the 2K level. But have no illusion, this was the key triggering event. We highlighted on a number of time frames that you'd never held above. Let's just go to the monthly for that, because it shows so much better. You've never gone and closed above the 2K for a month. You see that? Until the end of November. This candle right here. So that was the triggering event for gold commencing its next up leg period after quite a lengthy sideways move. August the 20th. Yep, August the 20th. August in 2020, my apologies, August the 3rd in 2020. And you are now 3 years and a quarter later of a year. So this has been a fair old consolidation with many a pullback and a frustration, and the gold bulls, many of them don't believe it. They're in disbelief now. In essence, this has begun because they've had so many fake outs and disappointments and everything. It's the wolf that never comes. But this is very important for crypto because that triggering event is now seeing the central banks as the biggest buyers, actually, on gold are dumping debt. And debt is the turbo juice, the contraction in debt, the devaluation in debt markets. The lack of enthusiasm to buy new issuance, ever larger of debt, is indeed the big Ponzi scheme game that is being perpetuated at the moment. And debt, my friends, debt is going to collapse in value. Simple as that. And it is the turbo juice, and it is the collapse of the other system. That takes banking system down and currency down. Currency, you're going to have massive currency volatility, which can include spikes in certain currencies in a firing order. We go into greater detail on the Market Sniper on how we think that plays out. But the key thing is the contraction of debt will be the turbo juice of the new crypto system and blockchain and CBDC chain. Hence why we have Bitcoin at the moment doing what it's doing, and the value of what it's doing, and the triggering event that started with the power in Bitcoin. That is your Bitcoin chart. By the way, there were people that were referring to this grind up as a megaphone. They need to do our megaphone course and understand that is a 3 impulse rising wedge with a type 3 breakout that is hunting, I think, the next major level. So it's made our 40.5 target, by the way, that we first spoke about. You can see this. This is the inverted head and shoulder call from an extended period ago that we pulled back from once when we saw a risk of a head and shoulder and closed down here. But that started a long time ago. People have forgotten. You see that target being made? That is the head. That is the head of a 25k neckline. A 25k. Remember those numbers? Now you're in the 40s. And the next key level of significance is 42.5 for me. And that was a neckline on the downside during the bear markets of a major event. So I think we will run the 42.5. I think we've got the beans to do it. Whether we get to the 47.5, another neckline on the downside, is another question. I think you might take some sort of a rest at some point. So this is the performance of the original inverted head and shoulders. One more time to draw that pattern that we've done umpteen videos on. Neckline there, the 25k. There it is, and that target has been done. So we're in a bit of a gravy run where I think there's a chance you may get, in fact, that's the shoulder over there. So the head ends there. And that target is being made. And it was made Sunday night. I watched it happen. And this guy took a long time. It got a little bit of a slow start. The second dip was where we lost faith and said there might be a slam. There could be some risk, only to watch it break out and be wrong entirely on that. That's the only time we wavered from that call. And ever since here, we're saying this is going to melt up. The structure of it was going to melt up. There was the rising wedge, type 3 wedge, melt up. You're too close to key levels. Really, on balance of probabilities, that was the outcome that had to be expected. And with the triggering event of gold, this gave us the extra benefit. HVF method, guys. So last week, all my guys were told, Bitcoin, get into Ethereum. We've mentioned on this channel ETHBTC at a very critical level. There was some real structure there. We can take a look at that in a bit. We will look at the ETH chart as well for a bit. I just wanted to remind you that that target of 40.5 has now been run. And I would like to think that the 42.5 has a chance of happening as part of this blow-off, especially as the Americans will come into the markets later. And there'll be FOMO. And the point of that is when you get a really strong move, you got to remember also to take some off. So I will take off in and around the 42.5 and say thank you. It's been a great party. It's been very profitable. So getting long Bitcoin last week, getting long Ethereum last week, getting long gold and silver last week, and a currency trade and various miners have all served very well, plus an FX trade that goes with it. All these things were signaled to us. Jay Powell was a seminal chat. And he said, longer, more chance of rates going higher, more chance than people are pricing in. Why? Why does he say that? Because the rates going higher is the debt going lower. There's your seesaw. How many times have I done this? The debt needs devaluation. The debt needs devaluation. But they don't say, hey, we need to devalue and deflate our Ponzi scheme that we inflated of debt with all this QE we did. They don't tell you honestly like that. They just say rates can go higher. You know, everybody's stressing in the economy. Why would you want rates to go higher? You don't want them to go higher. The market will move them higher because they are devaluing debt. That is what everybody needs to understand. And as a result, what gets devalued in one space is a contracting monetary system needs the new monetary system to inflate, because you've got to move all the assets of certain valuation over across. Yes, those assets will deflate in value. Some of them will be property, some of them will be second-hand cars, subprime cars, a repo man. Oh dear, you can buy yourself a repo man subprime car in a while. Somebody will hate you for it. But anyway, that's a story for another day. That's Market Sniper. This is a great, great break. And this had classic signs that it was going to do this. We have the splitter in here on our rising wedge, the 3 impulse. That was a complexity, this up, down, and then around, and then back down. Because it zigged up and then it came straight back down and then went sideways and put in a down leg. There's your second impulse, and there was your third, and it gave us a falling wedge. We drew this in our community premium area and said, guys, you want to buy the break of the falling wedge. That was a key inflection point. That's what it's called, key inflection point for us. It wasn't an HVF triggering event. It's a key inflection point. Why? Because this is a rising wedge. You're getting higher highs, marginally higher highs, normally bearish unless you're in a 3 impulse rising wedge and you're expecting the outcome that gold is about to break and support the anti-fiats, and as a result you're going to do the one thing everybody doesn't expect, rising wedges that melt up. That's right. But rising wedges must go down. No, traditional technical analysis doesn't teach you the fact that it actually goes up. This was all a consolidation with buying along the lows here, and the buying was winning out. The buying knew this was smart money. It was the dumb money getting out at the 38k level, not seeing that the 38k level would eventually collapse, and that would mean an absolute rush, dam wall burst straight up to the 40k level as per our target and expectation. So Bitcoin is up. Bitcoin is up, and it's been a great week. Did you have a great week trading? Starting from last week into the Monday today, are you having a blue Monday or having a green Monday? Here's to green Mondays. HVF method gives you green Mondays. Go and smash that link. Stop being a wage slave and a wage surf and working for some corporation. It's time you had 2 swims in the sea every day. It's good for the sinuses. Breathe, and the salt water on your skin. That's the life to be having, my friends. I am broadcasting to you from a flying through B&B, going to my next B&B. Got an amazing December planned. Everybody coming. Beautiful houses to go stay in and relax and watch Bitcoin go up and make us all wealthier. That's the lifestyle you should want for yourself. That's the lifestyle I want for you here on crypto, because you cared enough to subscribe and give me a like right now by hitting the thumb at the bottom of that nail right there. You do it like that. Boom. It's really simple. It helps me because I say things they don't always like. You've got to help fool the algorithm, and even better, leave a comment. Here is my algorithm fooling comment. Do that. Boom. So Bitcoin strong. What about Ethereum? Let's go and show you Ethereum. What other charts have we got for you? In fact, let's do it. Let's first say goodbye to our pretty sexy draws. So I think there's a chance we will go to 42.5, but it's quite possible you will have a little bit of a grind up there. So there's a couple of ways. Before I leave Bitcoin, you could have a little bit of a rest after a fairly strong move like this, for example. You could have a little bit of a rest. You could do this. And you could actually give a micro HVF, but you don't always get that. You could get the rising wedge version. That fools everybody because everybody goes, it can't go any higher. And you do that, and it grinds along there with lots of buyers along the bottom. Could do that. You could get a flag, of course. So let's remind you of that, what a flag looks like. We've got a couple of flags. Actually, we've got a flag on Ethereum. We've got a flag on gold. We've been talking about the three big flags across different time frames on gold. The super macro one, well, super macro, the macro, let's just go with macro. Weekly time frame, right down to the daily, right down to the 4 hourly. There were flag. Small domino knocks over medium-sized domino that now can knock over the large domino, triggering the macro target, 2,900 and gold, and Bitcoin higher through the key levels. So let's talk about Ethereum before we leave. That's how you might go up. A couple of possibilities. That isn't a list of every single possibility. Of course, working on our HVF draw tool with the targeting. So the first targeting here for ETH is around 2,280. So remember this 2K line, this is in blue here. You see you're a little bit above, a little bit below, a little bit above, a little bit below. So gold and Ethereum were both kind of jaunting, obviously on a much lower time frame for Ethereum. It had got there more recently. It's not 3 years and a quarter years, but a similar kind of level. You go from key price points to another key price point. This is key levels of significance. We show you that, how you get fractals and winding up structures at key levels of significance. Did you know there was an HVF winding up structure? Did you know you could have got long here just over 2,000? And you would now already be $200, $250 to the good. Are you aware that that is at least 12%, 12.5%, and to target even more? And you could have bought cross margin, moderate leverage without getting too giddy, and you would have had non-stop move up in your favor. That was the flag. Let's take it to a lower time frame here. So this is a lower time frame structure, but there was your beautiful flag. There was your little squeezy. We talk about low vol. This was low vol grind up. Look at that. Then you popped and triggered. Then you made the first interim. Isn't that fascinating? Make the first interim. What happens? Pull back just in time. Second chance entry. The market loves you. It wants to give you an opportunity to make the money. Second chance entry for those that were sleeping on the job. Then you get a wind up squeezy, super low vol. Yes, guess what's going to happen here? All on your first interim. You can see that faint purple dotted line there. All on your first interim, submerged under it. You could buy at that level or below. And you got the kiss on the just-in-time entry level. Then you get squirted up. Then you get a flag. And now you are working your way up. But the best and fastest move was actually here on the triggering event. The best candles. Let's show you the best candles in the land. The ones that move fast away from your entry. That is how you do comfortable trading. Moves fast away from your entry. Allow me to introduce you to a couple of moments where that occurred. Who wants to be trading in this kind of environment? If you do, you should have already clicked below and got ready to book a call. That is kind of fast, but you will note not as fast in terms of thinness of box as the other two. This is how you get strong moves in your favor. Everything else here is continuation structure. Structure to buy time, help you breathe. Whew, it's talking so much. Relax, breathe, get some oxygen, catch in, consolidate, wind up, get new energy, surge again, surge, 3 surges, my friends, and you're almost home to the target. Maybe you'll have a bigger pullback. There's the second interim, by the way. That is it over there. Right there, you blasted through it. You didn't hold too much time. You wound up on the flag to smash it, and you blasted to it. You might have a deeper pullback before you run the target, but you're very close to that target. It's quite likely to grind home. It also depends on what Bitcoin's doing. This is awesome, guys. This is great trading. This is easy trading. Look at the risk reward. Look at the risk reward here, even on the stop way down there and getting in late on the green line, which is our just in time, the last moment you should be getting in. Your risk reward, where's it, production, 3.66. Now, in actual fact, you should have got on probably at the axis over there and had your stop over there. That halves the risk, making it straight away a doubler. That's through 7. And of course, you get that extra bit of profit. So you're going to be knocking on the door of about an 8, assuming it performs to target. And we do a partial close, and now we have a very relaxed, lightly leveraged position to the long side that will pull back at some point, but we can hold for longer term. On why? Because we think the market's going to go higher. There's still a 47.5 there for Bitcoin. Maybe it makes that, but we will reduce. You retreat from the trade. Why? Because on the big macro time frames, those 40 levels were really heavy moments. Necklines on head and shoulders in the bear markets. It's going to have some pullback and moments. But hey, are you investment long in gold? Pure gold link below. Are you using crypto to trade gold, silver, and traditional markets and the crypto markets? Simple FX, link below. I'm using them. Works like a treat for me. Are you actually stacking? Yes, you should stack as well. Even as a crypto guy, stack some bullion. It's all in terms of gold and silver. Pure gold, the link below. Buy for the price I get and get the service I get from the same people. And then, of course, you should be investment to some degree of cryptos. And we are not in the freaky little micro caps. There's no pump and dump and sell something to you and get a bonus from some oily customer who's trying to launch a token. We don't play those games here with you. We are here to help you build wealth, and the safer place is in the God market, big high liquid tokens. I can't move that market against you. You can't move it against me. The overall dynamics, the truth, the liquidity is there for you to do light, occasional, at key moments trading. You could have done light, occasional, at key moments of trading and accelerated your gains to the upside there without taking ridiculous risk, and then taking yourself out of risk in case of those sudden, possibly a demand destroying event that could cause a sell-off. Okay, so that is Ethereum. Ethereum looking good, and I would reduce over there, but I will not close in full in lieu of possibilities of further upside. And of course, you will have your investment in Ethereum, your other tokens that we hold as well. So let's have a look at the crypto market cap. Let's say goodbye to that jaw. This is total crypto cap with BTC and ETH. So another reason why we had the feeling that something was coming as gold was winding up, we could see this, by the way, is a descending megaphone on a bull pole. That's right. That's what you need to know. This would be continuation structure. So while others were telling you they actually think it's going to sell, people are so tired of being bullish and not being believed, they flip at just the wrong moments. And there was that, very similar to gold, super low vol, guys. Usually bullish, and a pop and a pop, and then you're breaking out of right there the megaphone structure, and you are up and away. A little look back, and there you go. That is the total market cap, including Bitcoin and Ethereum in it, and the other alts. Note how you are also leaving a key level. This whole gestation was all around, in fact, my apologies, it's excluding Bitcoin and Ethereum. I started on total 3. I'm going to take you up to total. Let me restate. So it's excluding Bitcoin and Ethereum. So your alts are starting to move too. And this was an alt meter. And look at that low volatility. I'm going to take you to total 2 next. You'll see the story doesn't change very much. Continuation. So let's go to total 2. This is going to exclude Bitcoin only. So we're going to be adding in the dominance of Ethereum. So that was 400 billion. So the amazing thing, wow, guys, I just got to make this. This is such an important chart to show you. Again, the megaphone broadening structure, but this is not what I'm going to be talking the most about right now. So there's your bull pole, there's your broadening structure, there's where your top's being taken out. This was all, there was your splitter, there was the super low vol with including Ethereum as well. Doesn't change a great deal from total 3. But this is such an important moment. Many people don't realize a major bearish funnel. Nobody else has these lines on their chart, by the way. So the red line, the fat red line, and the green line. Nobody else has them because only I do HVF method and my community of people. Nobody else has them. Unless you're in our community, nobody else has them. And they are bizarre numbers, 676, kind of around the 675 and 625. Why are those so important? A major macro downside bear funnel. So let's just choose a different color. Let's make it super fat. This entire zone was a resistance zone. This entire zone was a resistance zone. I'll show you that pattern where it comes from right there. That is why you megaphoned right there. That is why you megaphoned. And when you broke with momentum, pop. Okay, so that's a little bit too big, Francis. Fat Cokie is fun, but let's not get stupid, yeah? We're hiding the whole candle there. There's the break candle. What does it do? Breaks, return moves, and runs. That's it. You have cleared the resistance on total 2 of the 625 to 675 resistance zone that nobody else told you was a significant zone. Only in our community do you know that. I don't even think I've YouTubed that fact here. This is the first time I'm discussing it. So, because I don't show you all the charts, I haven't got all the time to do that. We do updates in our community, webinars, videos, voice, chart shares, everything. So where did that come from? Why should you care? Was it anyway significant? Yes, it was the final dip sell-off into the lows, which made target, of course, on an inverted HVF. You wouldn't know that if you don't do HVF method and how to draw it. Squeezy, squeezy, Japanesey. That's the saying that you only hear here. Bang, bang, major funnel, target made. That was a key level. You put a nose above it, you couldn't hold it. You broke. This is where we've been. This is where we've been now. And now we've got to get above it and stay above it. Resistance here. You can see it. Let me do a week actually, or 3 days. Let's go 3 days. Because I want you to see it all. This has been an absolute lid on the pot for an extended period, guys. This has been a lid on the pot for an extended period. This is total 2 excluding Bitcoin. There you turn back. There you turn back. There you turn back. Eventually, flat bottom underneath here. No, it's not a head and shoulder for lower. It looked like one, but it went low volatility and turned. Bang! You get back in there. You wind up on that megaphone that I was showing you. Now you are leaving the 625, 675 funnel. That was an inverted funnel that brought you the FTX crisis and everything that followed, the already bearish moments that had begun happening there. That is it, guys. That is it. You've taken that lid out on the basing low. This is a turned market. It is a turned market. Listen, if you suddenly get a horrific demand destroying event and you run those lows and you come back super hard, then it's not a turn market. Then we've been incorrect. If you run that, I would start to say, okay, we're going for a deeper dive possible. But right now, this is looking bottom, and what is calling the 1 trillion mark, which ran straight through the corners of this flag. Straight through the corners of this flag there, and through the midpoint that is right through our splitter there, like that. That was a big bear flag from the sell-off way up there. That was 69k Bitcoin, and then eventually down into here, and then you got another sell-off. Wow, big levels, big history, unwinding, bearish, big history. And look how long you had to wait. That was 22, May, June. It was June of 22. You had terrible lows. And then in beginning of the year, you were still very close to it. It's taken this whole year to get around and start to make some headway. So that's total 2. Let's do total 1. Take him out. Put the Bitcoin boy key back in the pot. Put the Bitcoin boy key back in the pot. Here you go. That was the head and shoulder target, this level. So many lines on here. You'd think we do some work on our charts. So many lines on here. That target was such a key target right there. Let's highlight it over there. Targets we typically do in purple. This was the head and shoulder of this entire. That was the right shoulder. That was the head. And this is your 47.5. On Bitcoin, and that's your other shoulder just to the left there, and that gave you boing, big ass move down. That gave you right the way down there. That was such a big call, and it was such an accurate call on the downside, and you went marginally low there, and then you did that, and that turned out to be a little bit foxy, because at one point on Bitcoin it looked like it was going to be a head and shoulder, but in actual fact, and you had little head and shoulders that performed in there, in there, and in there. So we did have little sell-offs that gave you targets that performed. There was the target for that, down. And then you had another one there. We covered this as well long time ago in history. Go check the old videos out if you're interested. Head and shoulder, pulled it back down to there. But having had 2 that pulled back there and you never went any lower, it eventually was descending triangle with a support base. Where was the support base? 1 trillion. 1 trillion total market cap now. Remember, as I'm adding coins back in, the number gets bigger. So we are above 1 trillion total market cap. Right now, we are currently at 1.5. We just ran the 1.5. You see that blue there, 1.5? That's that level there. You have just run 1.5. How many of you know that? With all the crypto caps back in, you've just run 1.5, of which over 800 billion is Bitcoin. Over 1.5, and Bitcoin is 8 of that. So it'd be interesting to see the Bitcoin dominance as well as a percentage now. Is it going up? Is it going down? Well, I think it might even be slipping a tiny bit. We should have a look. Crypto market cap, again, that's the one excluding Bitcoin. We've seen that one. Such a key break. Let's go and have a look at BTCD for you. Initially, the dominance was running. Yes, it's still pretty strong. You're at 53.78. Let's see on a daily though, because you did have a pullback. It's not the legacy highs, but it could head back for that. So it is being a bit of a honey badger. Being in Bitcoin and Ethereum, the two majors, was the play. It's the safety play. I don't care that Solana did 15 if you're getting 12 out of Bitcoin. It's the safer play, Bitcoin. Sure, some can go. Everybody looks at the absolute number of X's. Solana can go, and probably has already done now, much more in X's so far. But right now, from last week coming into this week, the safe liquidity play is Bitcoin and Ethereum. And it's one of the highest percentages outside of Doggy and Solana. All the other top 10 are significantly less. Binance is like 2%. Tron is negative for 7 days. You know, these were the two to be in. And the gold market triggered it. The God market, that was fun. The God market of the gold market spoke first and then ran first. Then silver follows in the same way, Bitcoin and Ethereum. So welcome and well done if you participated in this. Be careful about FOMOing in. You might be at one of our HVF targets, just about ready to have progress decay. Be careful of oversizing. If you haven't used leverage, or you've occasionally lost a lot of money on leverage, be careful. You probably don't have sufficient member structure and methodology. Click the link below to improve that. Best to be investment until you're ready. This can hurt you. Leverage can hurt you. This is a non-advisory site. These are all my opinions and experiences of engaging the market. But the dominance is moving up. Bitcoin is firm. And there's real reason to expect a very good week from crypto. And all those videos that we were posting telling you both about the gold market and the crypto market coming, you're going to miss it. You're going to miss it, he said 12 days ago. You're going to miss it. Don't miss it. And then as the week came, we're getting closer. Unstoppable surge coming for the 40s. Did you get your unstoppable surge coming for the 40s? Hit the like if you did. Hit the down thumb if it didn't happen and the man didn't tell you and let you down. And leave a comment saying what an arsehole he is because he let you down. And then we'll be grateful for that, for the algorithm's sakes, if nothing else. Excellent. Guys, thank you for watching. Go have a great week. More technicals, more setups are actually happening. We have more setups on other cryptos that could be playing catch up in the short. Some of them are on the smaller cap side. I don't tend to over talk about those on YouTube. I don't want to be marketing or helping some project of some unknown value with a micro cap inadvertently, but we do trade them. We do trade them, and you can trade them smaller. And there's others. There's mid caps. There's other big caps that are in the top 15, top 25 that are very comfortable to trade with good liquidity behind them. Then there's our investment holding that are going to supercharge. Don't forget, we still have very bullish expectations out of XRP and XLM and the mystery other that is both going to outshoot both of them in due course when that happens. But this is now the Bitcoin and Ethereum hour. That comes a little bit later. Yes, okay, that comes a little bit later. Okay, thanks for watching. Catch you later. Book a call on the links below. First one to book a call, then your gold, your simple FX for trading currencies, gold, crypto, all with crypto as collateral. So you can put your crypto in there. Pretty useful. Click on the simple FX link below and join me making green in the little account. It's fun. It's a better life. You can do it. They are going to collapse that debt market. They need to inflate another market to replace it. Do you want to be part of that process? They're going to try confuse you, try shake you out. They're going to give you leverage. They're going to have you chasing tops so that you get it wrong. You need to be smart in terms of how you do this. Okay, HVF method is the way. See you on the other side. Bye for now.